They say the greatest disasters don't arrive with noise. They arrive with silence, with a soft shift under the surface, with numbers that look normal until they don't, with experts repeating everything is under control right before everything slips out of control. And right now, that silence is louder than ever. Because somewhere between 2025 and 2026, a single event is forming. A trigger, a spark, a rupture so severe that it will make 1929 look like a rehearsal and 2008 look like a warm-up. Most people will miss the signs. They always do. They're distracted by the noise, never the signal. But history repeats in cycles. Economies collapse in patterns. Empires fall in phases. And this time, the pattern has returned, bigger, faster, and amplified by technology, debt, and global interdependence like never before. This is not just another recession. This is not just another market correction. This is the kind of crisis historians will write about for decades. A moment future generations will study the way we studied the Great Depression. And it begins exactly where every major collapse begins, with confidence, overconfidence, and then the sudden disappearance of it. Because every bubble is made of optimism, and every crash is made of broken expectations. The setup, the most fragile economy in history. To understand 2025-2026, you need to visualize a tower. A massive tower built over decades, each floor representing a new layer of risk. Exponential national debt, artificially low interest rates, endless money printing, squeezed middle class, corporate leverage, consumer loans at record highs, housing prices detached from reality, governments spending more than they earn, banks holding assets worth far less than they claim. The tower stands tall, impressive, confident. But deep inside, cracks run through the structure. Cracks no one wants to see. And then something strange starts happening. Banks begin tightening lending. Consumers begin defaulting. Corporations quietly issue warnings. Governments release reports carefully worded, cautiously optimistic, suspiciously vague. The foundation is shifting. The tower is trembling. The pattern returned. Look at 1929. Look at 2008. Look at every major collapse in history. They all follow a pattern. Asset prices inflate beyond fundamentals. Debt expands beyond the ability to repay. Confidence peaks. A single, unexpected event hits. Panic spreads. Liquidity disappears. Everything unravels at once. We are standing at stage 4. And the trigger? It's already forming. The one event. Some say the trigger will come from the stock market. Others say it's real estate, or government debt, or global geopolitics, or technology. But history tells a different story. Crashes rarely come from the place everyone is watching. 1929 wasn't triggered by stocks. It was triggered by credit drying up. 2008 wasn't triggered by houses. It was triggered by hidden leverage exploding. The dot-com bubble wasn't triggered by tech stocks. It was triggered by liquidity tightening. The biggest collapses come from the weakest link no one sees until it snaps. And in 2025-2026, that weakest link is forming in something far bigger than stocks, real estate, or crypto. The global debt derivatives infrastructure, the invisible engine of the modern economy, a system built on trillions in interlinked obligations, complex, opaque, and dangerously interconnected. One failure in this system doesn't break a market. It breaks everything connected to it, like a spider web snapping in the center.
The silent threat. Right now, countries are drowning in debt. The U.S. debt is beyond $35 trillion. Europe is fragmented and overleveraged. China is facing a real estate implosion. Japan is trapped in a monetary corner. Emerging markets are suffocating under dollar-denominated loans. But the real danger isn't the debt itself. It's the derivatives tied to that debt. Betting on interest rates, betting on risk, betting on currencies, betting on liquidity. These contracts are stacked on top of each other like dry matches. One spark is all it takes. And that spark is coming. The three signals no one is watching. There are three signals that always appear before a major collapse. Signal 1, liquidity drying up quietly. Banks begin hoarding cash. Interbank lending slows. Small cracks appear in overnight markets. It looks tiny, but it isn't. Signal 2, volatility rising before the storm. The market shakes for a moment, then stabilizes, then shakes again. Investors call it noise. It's not noise. It's warning. Signal 3, a sudden event sparks panic. It could be a major bank failure, a sovereign default, a currency collapse, a derivatives mismatch, a geopolitical flashpoint, a credit market freeze. The event itself doesn't matter. What matters is contagion. When one domino falls, it doesn't fall alone. Why this will be worse than 1929? The world of 1929 was isolated. Economies were not fully connected. Banks were not globally intertwined. Debt was tiny compared to GDP. Derivatives did not exist. Digital markets did not react in nanoseconds. Today, every sector is wired together. Every country is financially entangled. Every asset is cross-collateralized. Every risk is multiplied. In 1929, panic spread through newspapers. In 2025, panic spreads in real time to billions of people simultaneously. A digital panic is not like an old panic. It is fast. It is global. It is catastrophic. We are entering the final phase. There is always a final moment before collapse, a moment when everything still looks normal, but nothing is stable. Right now, consumers feel the squeeze. Investors feel the fear. Corporations feel the pressure. Governments feel the panic. Everyone thinks someone else will fix it. No one realizes the system is already too stretched to save. The cracks are widening. Confidence is fading. And once confidence breaks, everything breaks. When the trigger hits, whatever it is, nothing will contain it. 2025 to 2026 will not be another recession. It will be an unraveling, a reckoning decades in the making, the event that finally exposes how fragile the global system really is. And this is only the beginning.
Every collapse has a rhythm. At first, everything feels slow, almost calm. Markets wobble, currencies twitch, politicians reassure. Analysts appear on TV with their usual script: temporary correction, healthy adjustment, nothing to worry about. But underneath the surface, pressure is building. Deep pressure, silent pressure. The kind of pressure that doesn't release, it erupts. And the eruption we're heading toward in 2025, 2026 is the direct result of a system designed to fail. A system that could only survive under one condition: infinite confidence. Once confidence disappears, the entire structure collapses on itself, because the global economy is not made of money, it's made of belief. And belief is the most fragile currency ever created. The machine built on impossible promises. Imagine a machine, a massive, interconnected global machine, every gear connected to another gear, every lever tied to a trillion-dollar policy, every cable holding the weight of millions of lives. Now imagine this machine running on promises. Not on gold, not on savings, not on productivity. Just promises. Promises that countries will pay their debts. Promises that banks will stay solvent.
Promises that inflation will stay low. Promises that interest rates will remain stable. Promises that governments can always print more money without consequences. But here's the truth. You can't build an infinite system on finite trust. And trust, global trust, is evaporating. The three systems that are breaking at the same time. For the first time in modern history, three global systems are failing simultaneously. The debt system, too large to sustain. The derivatives system, too complex to unwind. The monetary system, too manipulated to function. Any one of these would trigger a recession. Two of them would trigger a depression. All three at once? That's how you get an event that makes 1929 look like a footnote. Let's break it down. 1. The debt system. The world is overdrawn. Global debt isn't growing linearly. It's growing exponentially. Governments borrow more to pay interest on what they already borrowed. Corporations borrow to survive. Consumers borrowed to maintain the illusion of a middle-class life that stopped existing years ago. Here's the part most people don't know. In 1929, global debt was about 20% of GDP. Not 100%, not 200%, 20. Today, global debt is over 350% of GDP. And that's just the official number. The real number is far worse when you include shadow banking, off-balance sheet liabilities, unfunded pensions, government guarantees, private credit markets, derivative exposure. In 1929, debt was a spark. Today, debt is a nuclear weapon, and everyone is sitting on it. Number 2, the derivatives system. The invisible bomb. If debt is the gunpowder, derivatives are the electrical wiring running through the entire building. Derivatives are bets. Bets on interest rates, bets on currencies, bets on risk, bets on debt. They were invented to stabilize the system, but like every financial invention, they evolved into something monstrous. Today, the derivatives market is over 2 quadrillion. That's 2,000 trillion. To put it simply, if the global economy were an airplane, derivatives are the explosives taped to every critical system. All it takes is one mispriced contract, one counterparty failure, one liquidity freeze, and the entire structure detaches from reality. This is why 2025-2026 is so dangerous. Debt is high, volatility is rising, liquidity is evaporating, and derivatives magnify the impact of every tremor by 100x. If 1929 was a fire, this is a chain reaction inside a nuclear facility.
3. The monetary system. The end of printing. For decades, governments had one strategy to fix crises: print money, lower rates, stimulate the system back to life. This worked in 1987, 2000, 2008, 2020. But there's a problem now. Inflation destroyed the escape hatch. Central banks can't print aggressively anymore. Inflation explodes. They can't raise rates aggressively. Debt implodes. They can't hold rates steady. Confidence collapses. They are trapped. For the first time since central banking began, they have no tools left. And when the captains can't steer the ship follows the storm. The domino no one is watching. Collapses never start with the most obvious domino. 1929 didn't start with stocks. 2008 didn't start with houses. The Eurozone crisis didn't start with big economies. It started with Greece. History has a pattern. Crashes start at the edge, then rip through the center. And right now, several edge dominoes are ready to fall. A mid-sized European bank, a weak Asian real estate giant, a South American sovereign debt failure, a Middle Eastern currency shock, a U.S. regional bank suddenly short of liquidity. None of these look catastrophic on their own, but connected through derivatives, through global credit markets, through cross-collateralized assets, one small failure becomes the spark that ignites the megastructure. Just like Lehman Brothers, tiny compared to the system, but holding threads tied to everything else. In 2025-2026, we will see another Lehman event, but bigger, faster, and globally contagious. The digital feedback loop, why this crash will be instant. Something exists today that didn't exist in 1929 or 2008. Algorithmic panic. Markets no longer wait for humans to feel fear. They react automatically. Algorithms sell at the speed of light. Bots trigger liquidation cascades. AI-based models detect risk early and exit instantly. Social media spreads panic in seconds. Crypto markets never close. Retail investors panic in real time. The result? A collapse that unfolds in hours, not months. Picture this. A bank failure hits the news. Within 30 seconds, markets react. Within 2 minutes, algorithms start selling. Within 5 minutes, every major asset class is down. Within 30 minutes, global liquidity freezes. Within a few hours, entire economies absorb the shock. This is why 2025-2026 will feel like a sudden implosion, not a slow decline. Technology compresses time, and compressed time amplifies destruction. The governments will try to intervene and fail. The first response will always be denial. This is temporary. We have the tools to handle this. Our financial system is strong. But behind closed doors, panic will spread. Emergency meetings, overnight rate cuts, coordinated interventions, liquidity injections, bank backstops, market shutdowns, capital controls. Everything they used in 2008 and 2020, only this time it won't work. Because the crisis isn't coming from one market. It isn't coming from one country. It isn't coming from one sector. It's coming from the structure itself. And you cannot fix a structural collapse with temporary patches. You can slow it. You can disguise it. You can delay it. But you cannot stop it. The moment of realization. The system isn't broken. It was built this way. There comes a moment in every collapse when people realize something terrifying. The system didn't fail. It was designed to fail. Every bubble was encouraged. Every debt expansion was celebrated. Every bailout created moral hazard. Every flaw was ignored because it made someone rich. By 2025-2026, the global economy will be so stretched, so over-leveraged, so interconnected that even a small shock becomes impossible to contain. And when people finally understand this truth, panic shifts into something deeper, hopelessness. Because if the system itself is the problem, there is no rescue. We are approaching the point of no return. There is a line that systems cross where collapse becomes inevitable, not because of one event, but because momentum takes over. Like a glacier cracking, at first only experts notice, then the cracks get louder. Then the entire structure fractures at once. 2025-2026 is the fracture moment. It's not a recession. It's not a slowdown. It's not a correction. It's the moment the global system reaches the limits of its design, and reality forces a reset. The moment a global system breaks is unlike anything else. It doesn't happen quietly. It doesn't happen politely. It doesn't wait for the news to confirm it. It hits all at once, like a sudden drop in gravity. One day, the world feels normal. The next day, everything feels wrong. And in 2025 to 2026, the moment the trigger hits, the world will enter a phase no living generation has ever experienced, a simultaneous global unwinding. Not one country collapsing, not one sector falling, not one market panicking. All of them at the same time. Because when a system is stretched beyond its limits, collapse is not sequential. Collapse is instantaneous. The first 24 hours, the panic cascade. The collapse begins the way lightning strikes, fast, violent, unpredictable. A medium-sized bank fails, or a government bond auction collapses, or a derivatives counterparty can't pay. It doesn't matter which one starts it. What matters is the reaction. Within seconds, markets freeze. Within minutes, major assets fall across the board. Within hours, global liquidity disappears. Investors try to exit. Funds try to unwind positions. Banks try to secure cash. Corporations try to cover debt. But there is no exit, no liquidity, no rescue. It's like watching every door in a burning building lock at the same time. In 1929, panic took days to spread. In 2008, it took hours. In 2025 to 2026, it will take seconds. Because fear is now digital, automatic, instant. The world faces the truth. The system was overvalued by decades. When the dust begins to settle, the truth becomes impossible to ignore. The global economy wasn't healthy. It wasn't strong. It wasn't booming. It was inflated, artificially, mechanically, deliberately. For decades, every crisis was patched with cheap money. Every bubble was ignored because it made people feel rich. Every debt expansion was treated as growth. But growth built on debt is not growth. It's leverage pretending to be prosperity. And in 2025 to 2026, the leverage comes undone. The world finally sees the real size of the illusion. Housing prices plummet. Stocks reprice to reality. Commercial real estate collapses. Pension funds implode. Banks fail. Governments freeze withdrawals. Unemployment jumps in weeks, not months. This is not a recession. This is a full reset. The human side of the collapse. Historians focus on numbers, charts, graphs, indexes. But collapses are not numbers, they're people. Imagine the scenes. A father staring at an ATM screen showing temporarily unavailable. A mother refreshing her investment app, watching her savings disappear in real time. A teenager hearing their parents whisper about losing the house. A business owner locking their shop for the last time. A retiree realizing their pension is gone. A student graduating into an economy with no jobs left. Families holding bills they no longer can pay. Workers finding position eliminated in their inbox. These are not statistics. These are the real aftershocks of a global economic implosion. And like 1929, the psychological impact will be greater than the financial one. Because people don't just lose money in a collapse. They lose certainty. They lose hope. They lose the world they thought was stable. The geopolitical chaos. Nations turn inward. Crises don't stay economic. They always become political. When markets crash, governments panic. When governments panic, nations fracture. In 2025-2026, we will see currencies devalued overnight, emergency capital controls, borders tightening, trade restrictions, rising nationalism, heated elections, street protests, social unrest, blame shifting between world powers. Every empire blames someone else. Every government claims innocence. Every leader promises solutions they can't deliver. But no one can fix a collapse of this scale, because the system didn't fail in 2025. It failed long before. 2025 is just the moment it becomes visible. The final realization: the world is not ending, but the old world is ending. After every collapse, there comes a moment of clarity, a moment when people realize the world is not ending, the old world is ending. The world built on infinite credit, perpetual consumption, artificially low interest rates, cheap money, endless debt, fake prosperity, speculative bubbles.
That world cannot survive the mathematical reality closing in. A new world will replace it, but only after the system finishes breaking apart. 2025-2026 is not the end. It is the transition. The demolition before reconstruction. The forest fire before regrowth. The final chapter of an economic era that lasted decades longer than it should have. But transitions are brutal, and this one will be the most painful in modern history. The lesson history always teaches, but people always ignore. There is one lesson every collapse shares. One truth repeated through centuries, empires, and civilizations. The system collapses slowly, then all at once. And we are entering the all-at-once phase. The data shows it. The patterns show it. History screams it. But most people won't listen. They never do. Not until it's too late. The closing warning. The next years will test nations, markets, institutions, and people. Some will adapt. Some will fall behind. Some will panic. Some will rebuild. But no one will pass through this era unchanged. Because once a global financial structure of this size collapses, nothing returns to the way it was. The world will be divided into two groups: those who were prepared and those who ignored the signs. 2025-2026 will draw that line clearly. If you want to understand what comes next, if you want to stay ahead while the system shakes, if you want more deep, cinematic explanations like this, comment below and tell me what topic you want next. And subscribe to the channel, because the next videos will reveal what most people will only notice when it's already too late. Your future self will thank you.